Dear business owners, hey, so before I jump into anything, I have three questions for you guys. Okay. How often are you ever caught unaware of whether or not an expense is a business write off? Question, food for thought. And, are you actually taking advantage of your tax write offs or what's made available to you? And was there ever a point when you went to go file your taxes or look at your books or something like that? You're like, wait, I didn't make all that money. Okay, so those three questions, I want you to think about them as I go through today's topic, right? You want to make sure that you're taking mental notes because this is going to be very important as a business owner, right? So, with this week's topic, I'm talking about business expenses. What makes an expense a tax write off versus what makes it not a tax write off, okay? So, with that being said, my name is Rose Brown, also known as the Accountant Therapist, and I am the CEO of Brown's Fulfillment Consulting and Accounting Firm. And these series are catered towards entrepreneurs and business owners, whether you're new, you've been at it for a while. Listen, we don't all know everything, right? So these will help you to kind of put things in perspective and just kind of help you to get it together. Okay. All right. So this week, lesson three of my accounting series is a build-up off of the last two. So the first one was don't commingle funds. The second one was you track it or you lose it. And today we're actually talking about that what makes an expense a business write-off. Okay. So let's dive right into it. So when it comes on to a tax write-off, it's important to note that only employees are not able to take a write-off. Let me rephrase that. Employees are not allowed to take a write-off. The only individuals that are allowed to take a tax write-off are self-employed individuals, business owners, entrepreneurs, and investors, right? You can have a rental property. Only, again, I'm restating it because under the current tax code, which is the Tax Jobs and Cut Act, employees are not allowed to write off an expense that they incurred in order to provide their service at their job. Only persons who are self-employed are allowed to take a write-off. Now, it's important to know with that same statement that the tax code was really written for us folks, people who have a business, who are investors. Those are the folks that the tax code was written for. So if we follow it, do what it says, pretty much take the write-off, you will maximize your tax savings, maximize your deductions, and do what the law is pretty much telling you to do. Again, tax write-offs are made for, again, us. All right. So when it comes on to the tax write-off, people don't tell you that as an employee, you tend to pay the highest amount of taxes. And that's because you don't have much flexibility to write off expenses. Whereas when you're a business owner, you're self-employed, you have so much more flexibility because if the facts and the circumstances really is in set up in a certain way, you can write off almost anything. I'm not going to say you can write off everything, but almost everything can be written off if the facts and the circumstance of the situation is within the realm of the tax code. Okay. All right. So when you think about a tax write off, and I'm going to dive deeper into each of these, you want to think about what is the facts and circumstance of the situation in incurring that expense. Why did you incur that expense? What's the purpose? And was it luxury or did you really need it? Right. So you want to ask yourself these questions when you go to make a purchase, or even after the purchase, determine, hey, is this really a write off? Ask yourself these questions. So when it comes on to determining, in addition to these questions, because it's just one size doesn't fit all. Sometimes a situation isn't as ideal as we would want it to be, right? So when it comes down to expenses, what's going to be the make or break is the comparison between your peers in your same industry. So if you are, say, an auto mechanic, is the person down the road experiencing or incurring the same expenses as you are? If you're in the hair industry, is that the same type of expense that the salon down the road or a state over may be incurring? Okay, so these are things that you want to keep in mind. Industry comparison. Now, things won't always be norm and dry cut the way we want it to. Some things are going to be out of the norm, but as long as you're able to prove that, hey, this was actually a business expense, meaning you can prove that it was ordinary, necessary, and for the purpose of the business, which I'm going to dive into. Don't worry. So when it comes on to determining a business expense, there's three things I want you to think about. Is it ordinary? Is it necessary? And does it have a business expense? So when it comes on to ordinary, you're thinking, well, is this a common expense? Are people within my industry, again, that same word industry, are they incurring the same type of expense? And usually a lot of things do fall into the ordinary, right? So you have office supplies, advertising, marketing, those sorts of things. Those are usually ordinary because it's a common type of expense, right? Now, if we take a step further and we look at the necessary aspect of it, the question becomes, well, did you really need it? How is it going to help you and your business to either sustain or experience growth? So that's where the necessary part of it comes in. And I'll definitely throw out some examples here so that it kind of pulls it together so it makes sense. All right. So if we look at the necessary aspect of it with an expense, if you went out to buy a vehicle for your business and you brand it, put your logo, all of that, you're promoting your business. That's a necessary expense for your business to grow so you get the word out. Again, the facts and the circumstances, does it fall within the realm of what makes it a business expense? The purpose of it. Okay. So let's look at a couple of examples. If you have advertising and marketing, you are paying someone to promote your business or paying into ads so that the word gets out there, right? So people know what's going on. That's ordinary and necessary in order for the business to continue and grow. All right. So job supplies and materials, and that is a broad one, right? Because depending on your industry, your materials and supplies that you need in order to get the job done looks a little bit different. So if you work at a hair salon, you need your hair supplies, right? It looks different than the person who is selling retail. They need different things. So what do you need in order to get the job done? Job supplies. Okay. And then, of course, you have your legal and professional fees. And these are just three examples I'm throwing out there. There are quite a few other ones. But legal and professional fees, you have to pay the professional to do what they do. You started your business to do what you're doing, and they are doing what they're doing because they've earned their degree, their experience, all of those things to be able to provide you with a valuable service. So investing in that is absolutely an ordinary and necessary business expense. Okay. So let's look at it from an industry base. So if, for example, meals, because this is a common one. I don't know about you, but I like food. I know a lot of people like food too. But meals is one of those things where it's kind of overlooked because it's just kind of slipped under the radar, and either we take advantage of it or we don't, right? You don't want to miss out on any expense, regardless of how small you think it is. So let's say, and I'm doing industry comparison here. Let's say you're a professional athlete, right? And you have a truck driver. The professional athlete won't necessarily go to the same place that the truck driver would. And this is subjective. So the truck driver may just go to a diner, the professional athlete, they may want to go to a five-star restaurant. It looks different, and statistics will show that. So that's a comparison between industry, right? These aren't the same industry. So you are not necessarily expected as a truck driver to dine where that person is dining for a business expense, unless it's out of the norm where it's you have a luxury client. And that goes into my next example with this particular same meal thing, right? So let's say you're a truck driver, but you drive for luxurious, well, you transport luxurious vehicle. That looks different, right? So you're able, excuse me, you're able to do things a little bit different because you have those types of clients. So the facts and the circumstances, does it align with what makes it a business purpose? So those are the things you want to kind of keep in mind when you're determining whether or not an expense is a business write-off. So one other expense that I do want to point out in particular, because under the current tax code, a lot of things changed, and this is one of those things that actually changed. So it's entertainment. Entertainment, unfortunately, is not a tax write-off under the current tax code. So I'm gonna break it down in two different ways so that you can see why it's not. Well, really that it's not. But people oftentimes pair entertainment with meals. Meals and entertainment and just peanut butter and jelly, right? But ever since the new tax code, tax law, they dropped that. So let's say you went to a basketball game and you bought the ticket, then you bought the food. You bought them separate. Under these circumstances, the entertainment is still not deductible, but the meal will be, a portion of it will be. If you purchase them together, you paid $100 and you got the ticket, you got the food, everything together, it is not going to be deductible. You have to make sure that you separate these two, okay, in order for the meal to be deductible. And especially if you're going to a basketball game or something like that, the food there is not necessarily cheap. So you want to make sure that you are accounting for this so that you can write it off. Because as I've always mentioned, if you're not able to write off an expense, you're pretty much going to pay taxes twice. Okay, you're robbing yourself of tax deduction. So make sure the situation, the facts, and everything within aligns with what the tax code allows you to. Because as I mentioned, the tax code is written so that you have flexibility as a self-employed person, a business owner, to be able to write off the expenses that you incur in order to provide the services that or the products that you give to the marketplace. Okay. All right. So to add on to that, now that we know that, hey, this is a business expense, right? You want to make sure that you're not just spending just to spend. Spend with purpose so that you are actually maximizing your deduction and it's not just happening out of the blue. Because if you spend without a purpose, there is a high possibility that it may not even have a business purpose to it, or it may not be necessary. So before you even go out and say, hey, I'm gonna buy a car, this and that for the business, make sure you ask yourself, is it necessary? You know, what's going to be the ultimate benefit? And sometimes you may decide to do it just for the tax write-off, but think about it. Tax write-offs are not dollar for dollar. So if you owed $20,000 in taxes and you bought a truck that cost $20,000, that's not going to negate the taxes that you owe, because taxes at the end of the day is a percentage unless you have a tax credit. Credits are dollar for dollar. Deductions are more so percentage. So when you're thinking about making a large purchase, make sure that you put purpose behind it, because if you don't, it may not even make all that much sense for you to invest in the tax savings isn't as much as you anticipated it to be. Okay, so again, don't buy a car just to buy a car. Make sure it makes sense. And not only are you going to ask yourself, does it make sense? And you know, sometimes we talk ourselves into it, but that's okay. Make sure that you're actually planning. Talk with your accountant if they're the one that's doing your taxes, or your tax professional, whomever it is that's heavily involved in your tax life, not necessarily your tax preparer. It's not enough. They need to understand the tax code to the extent that they can help you to creatively use the tax law within your favor, because that's what the tax law was created for. Okay, so you have to make sure that you are planning accordingly and you're consulting with the professionals to whom will be a write-off for you when you actually incur that, but consulting with them to determine if this will actually make sense within your business. Because this is a big deal, especially when it's large expenses. And you don't want to write off so much to where you get into an audit and it's like, oh, you know, what's going on here? We want to do the right thing the first time so we don't have to put a band-aid on it or try to fix it later, because it costs more money at that point. Okay, so all in all, you want to make sure that you document everything. It's not enough that you've incurred these expenses, but you want to make sure that you actually document it, because if you have no documentation, it did not happen. And if it did not happen, what do we say? You're going to be taxed twice. Pretty much, you're robbing yourself of tax deduction. So everything that happens, you document it. You went out to eat a meal. On that receipt, you want to go ahead and write something brief, what you talked about, you know, what's going on there, because at the end of the day, it's your words against the auditors, and your words is just simply not enough. You need proof. And actually, I've seen situations where auditors don't want to hear you. They want to see the proof. Did this really happen? Because technically, we can almost say anything we want to say. So that's why they have to stick to the books and say, let me see when, where, and how much this actually costs. They want to see the actual document. So you want to make sure that you have a digital copy of everything that takes place within your business. Receipts are going to wipe out pretty quick. Okay. And those documents will be your weapon within a legal battle. And in this situation, really with the IRS. So you don't want to neglect or overlook keeping your receipts or keeping track of things. And yes, we have our bank statements, but you want to make sure that you're doing as much as you can so that if whenever that time even comes, you're in a situation where you're not worried, you're not scared about the auditors coming because you have your weapon to cover, to really defend you if you're ever in that battle, right? And this really ties back to last week where we talked about either you track these expenses or you will lose them. So if you don't have a system in place, you definitely want to make sure that you have one. And this is where I would definitely highly recommend that you head back to lesson 2 and watch that so that you can hear the different types of bookkeeping approaches and determine what works best for you. Okay. And no matter how small these expenses are, trust me, they'll add up pretty quickly, really quickly. And then at year end, you don't have to ask yourself, I didn't make that much, or can I write off anything else? If you do your due diligence as a business owner, you can go ahead and maximize your tax write-offs. You're not expected to be an accountant. You're not expected to be a tax professional, but you're expected to know at least the bare minimum, which is, hey, what is a business expense? And we went over all 3 of those, right? The 3 criteria that really make an expense a business expense. Is it ordinary? Meaning, is it common? Is it necessary? Will it help your business to grow or sustain? And does it have a business purpose? Is the reason for the purpose for the purchase, is it for the business? So you want to make sure that you're crossing those things off your list pretty much. Okay. So make sure all in all, everything is within one location that you're able to go back and make sure that you're able to see it. Have a system. Every week, I'll definitely be hitting the nail on the head. Have a system in place. A bookkeeping system is crucial. So you incur the expense, you want to document it so you're able to prove it. Do not spend without a purpose. If you are unsure, connect with your accountant or your tax professional, whomever you're heavily involved with your taxes. Okay, because this is going to be crucial. It's make or break. Some of these expenses that you may incur, you can't retroactively fix it per se, right? So you want to be proactive when it comes down to things like these. And I do have to note, I actually just wrote a blog on this particular topic in much detail, which you can go and read on phillywnc.org and see all the different things that I covered in there. Okay, so that's it for this week. I will see you all next week at 7 p.m. again for another series within this accounting special. Definitely subscribe if you know anyone who this information could be useful to, because trust me, a lot of people just don't know this. You don't want, I'm teaching these classes so that people can wake up and not be in the same circumstances every year after year, month after month, not knowing or not remembering. It gets to the point where you're really putting yourself at a disadvantage. Okay. And don't forget, follow me on social media platforms at The Accountant Therapist, my firm at Brown's FCA. That's pretty much it for this week. I'll see y'all next week. And please, let's get it together. Okay.